as far as the East is concerned, they see an increasing need to protect their currencies against an inevitable crisis in the West. And that crisis takes the form of unsustainable government debt, which is leading all G7 countries, with the exception of Germany, into a debt trap. So what do? You get out of dollars. And to get out of dollars, I mean, you don't want to go into another currency because, the dollar is the king rat of currencies, as it were. You're going to go into gold, which is real money, and they understand it's real money. And that's what we've lost sight of in the West. And this is why Western vaults are being drained, if you like, of any liquidity.
Canada's increasing gold exports to China highlight the ongoing shift of gold from the West to the East. Throughout the first half of 2024, Asian gold demand has surged, with Vietnamese and Thai investors flocking to buy gold despite long queues and high prices. In Korea, gold has been flying off convenience store shelves. However, China is the biggest driver of this Eastern gold demand. The Chinese central bank has consistently increased its gold purchases while reducing its U.S. Treasury holdings. At the same time, young Chinese investors have lined up at shops to purchase gold, including small gold beans. Despite record gold prices in recent months, Western investors have not followed suit, remaining mainly indifferent to the growing demand. Alasdair Macleod points out that gold is moving from the West to the East, where central banks and wealthy individuals, particularly in China, continue accumulating physical gold. Meanwhile, the West seems unaware of this trend. The East views gold as essential protection against an impending crisis in the West, driven by unsustainable debt levels in G7 nations, especially the United States. Recent data shows that the People's Bank of China's bullion reserves increased by 160,000 fine troy ounces last month, reaching 72.96 million fine troy ounces. The central bank had been adding to its gold stockpile for 18 consecutive months until April this year, supporting the strength of bullion prices. Macleod notes that as gold prices rise, Western investors often sell to take profits, while Eastern buyers, such as China and Russia, are more inclined to accumulate. This ongoing pattern is steadily depleting Western gold reserves. Meanwhile, geopolitical risks, including heightened tensions in Gaza, have bolstered gold's appeal as a safe haven asset. Despite potential headwinds from a strong U.S. dollar and elevated Treasury yields, these geopolitical factors continue to support gold markets significantly. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Yeah, where is it flowing? Well, it's the old story. It's flowing from west to east, China is continuing to buy. The central banks are continuing to buy. Basically, physical gold is bid only. Not only the central banks, but also sovereign wealth funds in Asia and all the rest of it, and also quite a lot of the super rich in Asia are accumulating gold. And this is in sharp contrast to the West, where we just sort of shrug our shoulders and say, well, why are they doing it? We are completely clueless about what's going on in the bullion markets. But as far as the East is concerned, they see an increasing need to protect their currencies against an inevitable crisis in the West. And that crisis takes the form of unsustainable government debt, which is leading all G7 countries, with the exception of Germany, into a debt trap. The debt trap comes from two ways. I mean, it's not just the mounting debt. And we had extraordinary deficits for the first 2 months of the U.S. fiscal year. I mean, $625 billion or something. I mean, it's just going up and up and up and up and up. As far as the foreigners are concerned, they see this and they see that there is absolutely no reason why they should buy US dollars and Treasury debt at anything like these yields. And the problem is that if they hold off and they want even higher yields, it just makes the whole situation even worse. So what do? You get out of dollars. And to get out of dollars, I mean, you don't want to go into another currency because, the dollar is the king rat of currencies, as it were. you're going to go into gold, which is real money, and they understand it's real money. And that's what we've lost sight of in the West. And this is why Western vaults are being drained, if you like, of any liquidity. Every time gold rises, there's someone in the West who thinks, I ought to take profits. At the Chinese or the Russians or whoever say, thank you very much. So that's basically what's going on.
India's central bank, the Reserve Bank of India, added 27 tons of gold in October 2024, bringing its total gold purchases to 77 tons from January to October, according to data from the World Gold Council based on International Monetary Fund reports. This marks a five-fold increase in gold buying compared to the same period in 2023, highlighting India's growing focus on gold accumulation. With this recent purchase, India's total gold reserves now stand at 882 tons, with 510 tons held domestically. Alasdair Macleod notes that while India is steadily increasing its gold reserves, the country also significantly focuses on silver. The Indian government has been actively promoting green technologies, such as photovoltaic cells, which require substantial amounts of silver, further driving silver demand. The Reserve Bank of India's gold purchases have coincided with Indian investors accumulating over 17,500 tons of silver in coins and bars. Additionally, Indian-based funds have increased their silver holdings to more than 1,000 tons, reflecting a strong interest in both metals. This trend aligns with central banks in emerging markets such as Turkey and Poland, which added 72 tons and 69 tons of gold, respectively, from January to October 2024. This showcases a global shift toward gold as a safe haven asset amid economic uncertainties. Let's get back to the interview.
Well, we've known that, or at least I've known, that China has been buying gold secretly ever since the early 1980s. The legislation which appointed the People's Bank of China as sole agent for the government in dealing in gold and silver dates from 1983. There was always this mystery that in the big bear market, which really ran from the peak in 1981 all the way through to 2002, there's an awful lot of gold seems to have disappeared because the West was selling it. I mean, a lot of the private portfolios in Switzerland were liquidating their positions. All this stuff was coming out, and at the same time, mine output was increasing. So it's something of a miracle that the price actually didn't collapse even below that sort of 250 level, which more or less marked the bottom. But the reason for that is that China was very, very quietly, taking gold when it was offered, not bidding up, but just quietly accumulating it. And I reckon, this is looking at trade flows. It looks like it was looking at, capital inflows, because, of course, all this was, again, handled by the People's Bank of China, as the sole agent for foreign currencies. All those flows, I reckon, at contemporary prices were the equivalent, 10% of them were the equivalent of about 20-odd thousand tons, 20 to 25,000 tons. So I feel fairly confident that that's the sort of number which they had accumulated before 2002, when the Shanghai Gold Exchange was set up and Chinese citizens were permitted to buy gold. Since then, Chinese citizens have accumulated a further 26,000 tons, roughly, figure like that. Now, that's not the only form of accumulation by Chinese citizens, because banks have offered gold accounts and the Chinese citizens are enormous savers. I mean, in the past, they've tended to buy property, which they haven't necessarily occupied, as, if you like, their pension investment. That has blown up. Stock market, annual savings. Savings accumulating. This is household savings accumulating at the rate of around about $2 trillion a year. So you can see that there's a huge great overhang, if you like, of potential money going into gold. Now, we've recently seen that the People's Bank of China has been reducing interest rates And as a result of that, the returns on deposits less attractive. So I think we're seeing more and more demand, if you like, from the banks to cover their positions of unallocated accounts, if you like, or whether they're allocated. It really doesn't matter. But the Chinese banks, I think, have been covering their positions by, picking up whatever gold they can. And I suspect that some of them have been, behind a lot of the standing in for physical on COMEX and elsewhere. I mean, they got to get it from somewhere.
As we've seen, the growing demand for gold and silver in the East is reshaping global markets. From central banks to individual investors, countries like China and India are accumulating large quantities of precious metals, viewing them as essential safeguards against economic challenges. This contrasts sharply with the West, where the response to rising gold prices has often been to sell rather than accumulate. The ongoing shift highlights broader economic trends, where the East prioritizes long-term protection while geopolitical and financial risks mount. What do you think the future holds for gold and silver markets, and how might Western attitudes toward these assets evolve as global economic uncertainties deepen? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.